Okay, hello, we are live. Hi, everybody. My name is Jessica Fauteux. I'm a realtor with Remax Allegiance in Northern Virginia. And I am here joined by Kelly Megivern, who is a loan officer, a fabulous loan officer with George Mason Mortgage, and Cindy Marable, who is a settlement agent who does a lot of our closings at Community Title Network. And this is a first-time homebuyer discussion. If you are here with us live, feel free to type your comments in the chat. You have to give StreamYard permission for us to see the comments. If for some reason you can't, go ahead and comment later on our video, and we will address your questions if we don't get to them in the video in the chat. So with that being said, a lot of people come to me, first-time home buyers come to me and say, okay, what do I do? How do I get the process started? And I will always send them first to a lender to get a pre-approval, because it's like your wallet when you're going shopping. You really can't buy a house without a pre-approval. And they're going to close or end rather their process with Cindy. So we're going to take that into consideration, and we're going to start with Kelly, because that is where you would start when you're ready to buy a house. So my first question for you, Kelly, is what the heck is that pre-approval that your realtor wants you to get, and why do you need it?
Well, the pre-approval is needed because we want to make sure that we're qualifying you for the sales price and loan amount that you're looking to purchase with Jessie. So she needs to know exactly how much you may qualify for before she hits the road. So we don't want to send you out on the street looking for homes that are, above your budget. So we want to balance everything out. So the first thing we would have you do is apply online. It's a simple process. It usually takes about 15 minutes. You're going to enter in where you live, where you work, and your bank balances. And from there, we can pull credit and see, is our credit score in line with where the current guidelines are, and how much money that we have saved in order to make sure we have the proper money saved for down payment and closing costs.
So that leads me to my next question, which is how much cash does an individual or a couple need to be able to buy a house?
Generally, well, there's a few different types of loans. There's a conventional loan, an FHA loan, and a VA loan. So on a conventional loan, generally you want to have 5% or more saved, going plus closing costs going into the transaction. On an FHA, you only need 3.5%, and a VA loan, you actually can finance 100% of your sales price, which is a benefit of being a veteran. There is a 3% down first-time homebuyer program on conventional loans. It does have some income limits, but it also gives you reduced mortgage insurance for having been a first-time homebuyer. There is some online counseling that is needed. It's just a course that you take. It's pretty quick. But that allows you to have that lesser down payment and lesser mortgage insurance.
Great. And so how much about is our closing costs? I get that question a lot.
Well, it depends on the sales price and the loan amount. So, it could range you anywhere from maybe $8,000 on closing costs and prepaids up to maybe $15,000 on closing costs and prepaids. Some numbers on the good faith estimate are based on the sales price and loan amount. So tax stamps due to the county and state and your title insurance costs are going to be based on those numbers. So if you're buying a house that's less expensive, some of those costs are going to be less and some are going to be higher. We also estimate for average title company fees and appraisal fees, survey fees, and escrows that are needed to go into your new loan.
Right. And I also want to throw in here that you will have other fees that you need to pay that are not included in those closing costs. For example, if you're going to get a home inspection, that typically will be about, between $450 and $750, depending on the size of the home. And then if you get a radon test, that's about $130. And then any further inspections you want to do, a pest inspection, if you pay for it as the buyer, is $40 typically. And then my next question. Oh, go ahead.
I was just going to ask you, maybe you could help explain to some of these people what the difference is between a home inspection and an appraisal.
Right. So that gets kind of into the process piece.
Okay.
So the home inspection is an inspection of the house. So like you wouldn't buy a used car without doing an inspection of the car, making sure it's running. Same thing with a house. It's really not a good idea to waive a home inspection. And that is when you get a certified home inspector who runs through the house. Well, not runs, looks at all of the systems. In Northern Virginia, a lot of the homes are older here. So you're going to want to look at the electrical in the house and make sure it's to code and not going to cause a fire. You want to look at the attic and make sure there's not a city of mice up there. The radon test is going to tell you if there's radon that can cause cancer in your basement. Looking for things like asbestos in older houses. So just making sure that the house is a good house and a safe house, and then telling you all the ways your house can kill you. And then you can decide from then, if you have a contingent contract, if you want to walk away because there are too many issues with the house, or if you want to stay in it because you love it and you can make it work. An appraisal is basically one person's opinion of what the home is worth. So they'll come out, typically, I think it's about $500 for the appraisal. They come out, they look at the house, they measure the yard, they measure the rooms if there are no dimensions specified, no plat. And then they are going to look at the comparable properties that have sold in the past 6 months, if there are any, and then give a value assigned to the house. And so the appraisal contingency, which we'll talk about again in the process, is a contingency in place that protects you, because you won't get a loan for more than the appraised value unless you'll get an appraisal waiver, which we'll talk about later. And so
And the appraisal is the collateral. The house is the collateral for the mortgage. So that's an important piece.
Right. So let's say you make an offer at $550 for a property and it appraises at $525. If you have the appraisal contingency, you can ask the seller to come down to $525. And if they won't, let's say they'll come down to $530. Well, you're going to be on the hook for $5,000 because you will only get a loan for what the appraised value is.
Right.
That being said, if you're putting 20% down, Kelly can run it through DU and see if we can get an appraisal waiver. And it's property dependent at that point. And if you can get an appraisal waiver, you don't even need to have an appraisal.
Right. One thing that I wanted to have you talk about, Jesse, is you're talking about sometimes paying the difference between the sales price and value. What is the overall competitiveness of the market like right now?
So it's pretty crazy out there, but it's a little bit less insane than it was in March and April. People are making offers, and there are multiple offer situations out there. And in the current market, the house is either hot or it's not. And if it's hot, you're going to end up in a competitive situation. So we are seeing an average of about 4 offers on a given property right now in Northern Virginia. Occasionally, there may be a house that only has 1 offer, and that's great because then you're not in a competitive spot. But overall, it is competitive because there is limited inventory, limited number of homes for sale for the number of buyers out there. And I was going to ask you the same thing, Kelly, about interest rates,
Right.
and how that plays into things.
Well, going back to the competitiveness of the market, sellers are more apt to take a conventional mortgage from their purchaser than if it's an FHA or a VA. With both FHA and VA, there's what's called an amendatory clause, which kind of allows the buyer to back out if the house doesn't appraise. So if there's multiple offer situation and they've got conventional offers versus VA and FHA, if we can work you into at least a 5% down conventional, it's better than us going FHA or VA because we're more apt to win in those situations.
Well, Jesse, obviously you have clients who don't want to go conventional. So what is your strategy in this market for
That's a
helping
really good
the
question.
client win that contract?
So I have a friend who's been struggling to get her VA buyers under contract, and she's been doing everything right. And we can only do what we can do, right? So if you have a VA buyer with 0% down and they're up against a 20% down conventional loan, it's going to be very challenging to beat that. So the first thing I'll tell a VA buyer or an FHA buyer, or even a conventional 5%, anyone, that you're going to get the house you're supposed to get. You can only do what you can do. We only have X amount of money in our pocket, right? So we can't just throw 100 grand on top of the sales price if we don't have it. So, with a VA or a lower down payment, if you want to be competitive, you have a couple options. One is to use an escalation clause. It works like eBay. So you say, okay, I'll escalate in increments of a certain amount. And if you're a VA, that amount needs to be pretty significant to compensate for the VA loan, which is stupid because the VA loan's a great loan, but that's what it is. So I'll say, let's just escalate in increments of maybe $11,000 over any other offer up to a max of, and then what your magic number is. And that number needs to be your no regrets offer, your no regrets number. And then at that point, like if it goes for 557 and you offered 552, but you just couldn't go a penny over 552, you're like, okay, fine, I'll move on to the next one. So the escalation clause is great. It also protects the buyer because, the seller has to show us the other offer and say, okay, yeah, we did have this offer for this amount. Another thing you can do is waive contingencies, which I also don't recommend, but it's something that people are doing. So we have to be cognizant of that. So one thing that I've started doing late last year was having pre-offer home inspections. So it's like a 1 hour walk and talk with a home inspector. Let's say the offers are due Tuesday at noon and you show up Monday morning at 9 with your home inspector and he runs through the house, and I help out too. I take the little electric testers and just plug them in all the outlets to see if the outlets work. I run the dishwasher, anything that's not really a liability for me. We try to get as much done as possible. And then that way the inspector says, okay, great, it's a great house, or no, it's not. And then you make your offer and you can waive that contingency knowing we've had it checked out, right? But I would not recommend waiving the inspection contingency unless you're able to get in there and at least do that. Other home inspection options are option to void only, where you can't negotiate the repairs necessarily. And that can be more competitive as well. Now, if you're VA, you have to do an inspection. So you could say, all right, we're going to do a pre-offer inspection. And then with VA, we'll put the inspection contingency in there, but maybe it's 1 day. And, we're only doing this because it satisfies the VA loan, but we already did a pre-inspection, and just putting that in there. VA clients can also, and anyone really, if you can't get an appraisal waiver, and let's say you're afraid of waiving the appraisal entirely, totally makes sense. And I don't blame you for doing it. You could have an appraisal gap. You could say with a separate addendum. And if you're writing this addendum, don't tell Kelly or your lender because they don't want to see they don't want to see this. So this addendum needs to be kind of a quiet addendum between the buyer agent and the listing agent that says, VA buyers willing to waive appraisal up to a cap of maybe 35,000 or whatever that number is. And then I'll tell you, you have to actually have that money in your pockets because you can't say that and then the appraisal comes back low and you're like, oh, well, I don't have that money. If you have this addendum, you've signed it and you've agreed to that. So that too. Another thing that's really cool is just not cool, but good to do is to have your agent and your lender contact the listing agent and speak on behalf of your best interests. So one thing I love about Kelly is that she'll call the listing agent preemptively and say, hey, I have everything I need. It's already in underwriting. They're good to go. And then I call and say, I've been doing this for a long time. I saw a lot of houses. I know what I'm doing. I'll be really easy to work with. And giving that warm and fuzzy feeling to the listing agent. Because one thing that sellers are afraid of is going back on the market. That's like their biggest fear. They just don't want to go back on the market. So if you can make your offer look like we're not going to have any issues, this is going to go to closing, that will give the listing agent and the listing agent's clients some warm and fuzzies and be more willing to accept your offer.
Jesse, are you finding that increasing the earnest money deposit is helping on any of those?
Absolutely. I'll take it from the listing side. I had a situation in January where I had 16 offers on one property. And the winning offer had $100,000 earnest money deposit. And that's how they won. They waived all of their contingencies. They waived their appraisal, their home inspection, financing, all of it. And they put $100,000 on the table that if this does not go to closing, you get to keep $100,000. And that was a huge incentive for my clients to accept their offer over one that was $2,000 less.
Wow.
Or $2,000 more, rather. Sorry.
That's security.
Yeah, it's security. And I have a question for you, Cindy. This is kind of going in a different direction, but what is title insurance? A lot of my clients ask me what that is, how much it costs, and why they need to buy it.
Well, I can kind of go back onto what Kelly had said as far as the cost. Everything is dependent on what your purchase price is, what the loan amount is. It is sliding scale. So you're going to be paying more for the owner's title policy, the higher the price of the house. But it is a set fee. And there are advantages of buying the owner's and lender's policy together, not waiving an owner's policy. I would never recommend anybody not getting owner's title insurance. Lender's title insurance is required. Owner's is optional. But again, I would not recommend because it's a one-time fee. The best way to describe it, it's almost like the opposite of homeowners insurance or any kind of insurance that looks to the future and looks at those risks. Title insurance looks to the past. So a title exam is done. An underwriter looks through it, reviews it all, and eliminates risk. Is it a big deal that a notary didn't date something 20 years ago, or someone died in the chain of title and there's not proof that a death certificate was ever given? How do we eliminate risk so that good title is given? Title insurance actually protects the title going forward against any type of challenge against that actual underlying title. I've got purchasers who get confused and think, oh, I have new construction, and so I really don't need it because the house was just built. Well, the property underneath has been in existence forever. So there is a chain of title that is done. So the title insurance for the owner is a one-time fee, and it protects against any claims arising from various types of defects that could affect it. I always give the example in my own family. Years ago, my sisters and I and all of our cousins got a letter from an attorney saying, you all need to sign this deed. Of course, there's no explanation. Looking into it, my grandmother, who had moved from Texas when my mom was like 12, and none of that generation was alive anymore. She had sold the property. We all know she sold the property. And someone finally did a full title search, and there was no deed of record. The property was still in her name. They must have done a handshake deal and gotten a check from each other, but there was no evidence that owner owned it. And they had owned it for probably 75 years. And that could be a total failure of title. Title insurance, a lot of the issues that it covers are human error. Somebody in the land records typed a name incorrectly and it doesn't show up on the title search. And it doesn't show. There's future coverages on some of the policies, and that's against forgery and fraud. And if anybody has watched the 4 a.m. infomercials on Title Lock, which is very similar to like LifeLock about your credit, that's one of the things that they talk about. You'll be alerted, you won't lose your home. Well, that's one of the things that title insurance also gives you future coverage against that forgery or fraud, that if somebody tries to sell your property or if they try to go and take a loan out And if you have an enhanced owner's policy, you're covered with that.
It also covers you against a mechanic's lien, correct?
Especially like on a builder situation. Contractors in Virginia have a liening period that extends well beyond the time period that they're on the property. And so we check, even with just regular homeowners, we ask a question and we get an affidavit that says they have not had any contractors on the property, at least in the last 120 days, who remain unpaid. And that's important because if those contractors remain unpaid 3 months down the line, they can place a lien, and the lien is against the property, not against the prior owner's name. And there's nothing like getting the letter in the mail from a contractor that we now have a lien on your property.
Right.
That's
I
kind of
always highly recommend clients get the owner's title policy because, you know, title insurance is just like any other insurance you have. You may never need it, but if you do, you're covered. And that's what's important, that security.
I always remind everybody, owner's title insurance is a one-time fee. And one of the things that it does go and insure is that if something happens, somebody challenged your title, even from a mistake standpoint, even from an invalid claim, it covers the legal fees. So if you're spending $1,500 or $2,000 for an owner's policy, how many hours of attorney fees does that cover?
Right.
The lender requires it. You cannot get a loan with an institutional lender without that type of insurance for them, because they want to make sure they're in first lien position, and that if ever they have to foreclose, they can. There's not going to be a challenge to the title that way. And I've had some people who have the theory, well, if the lender has the coverage and there was a claim, well, I only have so much equity. Well, as soon as that policy for the lender is paid off, which with the refinance market right now, a lot of loan policies were paid off this year. As soon as that goes out of existence, that policy goes out of existence as well.
The owner's policy covers you for life, correct?
You for life. And the one thing I always tell everybody is when you're thinking about for life, okay, well, you sell the house in 5 years, you are giving a warranty deed that states title to the property is good for as long as you've had any interest, as long as the property's ever existed, not just for as long as you've had an interest in the property. So if you're someone in the chain of title does not buy owner's title insurance, they can go back on those warranties and they can say, oh, well, there was a title claim or a title issue you should have known about. And your policy comes back into effect because now you are an interested party.
Right. So I always tell my clients, make sure you keep that owner's title policy in a safe place, even moving forward, because you do need to hold on to it.
Right. You need to make sure that you sell it, you throw out everything except your policy.
Right. So that's part of your closing costs. So again, to the first-time home buyers who are watching this, you know, you're going to need a down payment and you're going to have closing costs to pay. And that we can give you those numbers, you know, ahead of time, so you have an idea of what you're looking at. And then that brings me to another question for Kelly, which is about renting versus buying. Why do you think buying is probably a better option for some people versus renting? And what are some things people can do who may not be quite ready to buy to get in that position?
Well, real estate is not generally a short-term investment. It's about building your personal wealth for the future. So you, depending on your tax bracket and such, you can get some tax deductions for your real estate taxes and insurance. So you'd have to contact your CPA to find out, you know, how much is available for you. But when you're paying someone else's rent, you're paying their mortgage for them, and they're the ones benefiting from it. So if you are able to just save up that little bit of money, you're going to be better off in the long haul. Right now, rates are so low that if you put off buying, your rate could be 0.5% higher next year or even more. And you would be putting off, every month when you make a mortgage payment, you're building equity in your house because principal is going back onto your loan. So really, the sooner you're able to buy and save up, the better. In preparation for buying your house, you want to have as much saved in checking and savings. You may have a mutual fund account. You can actually take money as a 401k loan. You can borrow against your own funds. You can also get a gift from a family member. If you have someone who may be able to give you a gift to help with your down payment, it's better for you to buy now than to delay and, put off building that wealth, for yourself.
And also rents are very high right now, and the rental market is insane. I mean, I'm seeing people,
Yes.
Make applications 200 over the asking price for rent,
Yeah.
and offering to pay 3 months up front because there are 22 applications on one.
Right. The rental market is as competitive as just purchasing a home. So if there's a way that we can put together that down payment and some closing costs, either through personal savings or a 401k loan or something. On a 401k loan, you're actually paying yourself back interest. You're not paying somebody else interest. So it's definitely a very valuable tool to leverage in order to help you get into the home, because a lot of times your housing payment is going to be less than the rent you're paying. And you're just essentially throwing away money every month when you pay rent.
And a lot of rentals are not in very good shape. I mean, some of them are, but the people, when they're ready to sell their house, they try to give it a little bit of a facelift for the most part, unless you're buying something as is. Whereas, you never know what you're going to get with a rental. You don't get to do your home inspection on a rental. And like I said, houses can be dangerous. There could be some issue that you don't know about that you're living with as a renter. And you have that opportunity when you're buying, hopefully to get a home inspection and figure out what are the quirks of this house. Sorry about my dog, by the way. She's very sad that she's in the crate.
It's great to be a homeowner. It's really great to be a homeowner. You value having your own place. It's yours for as long as you want it to be. And, it's great knowing that you're saving money every month, even though it doesn't feel like you're saving money. That principal payment is going into your equity every single month, and you're really saving money. Even if you're not a good saver, like in your regular checking or savings account, that money is like an automatic savings for you that is just rolling over every time you make a mortgage payment.
Right. So I'm going to now go backtrack and give you all a little bit of an overall buyer process, and then we're going to talk to Cindy about wiring funds at the end. So the overall process of buying a home looks like this. You go to your lender and you can rate shop. Kelly will match any rate you can get. She just needs a letter that she can show to her boss. Get your pre-approval ready to go. And then, even before you have that, I'm happy to send you listings. I use a program called Real Scout that's real cool, because you can send me messages directly on it. You can do your own searches. I pay for it. It's awesome. And then once you are ready, you have your pre-approval, you found a couple houses you want to see, you shoot me over a list and we go house hunting, and it's really fun. And some people like to keep a folder and save all the listings in it and make notes. We go see houses, and then when you're ready to make an offer, that's when we sit down, we discuss what the offer situation is going to be. Are there multiple offers? Is there a deadline? Do we need to rush to get it in because the listing agent reviews it right away? And then what are we going to offer? What are the things that are important to you to have in the offer? Amazing. Ending. Then after that, hopefully you'll get your offer accepted. If not, you keep looking until you do. And, Cindy always asks people at the closing table if they got the house they're supposed to get. You will. The house you're going to get is the one you're supposed to get. And then once you're under contract, if you have contingencies, those contingencies start playing out. You have your home inspection, you have your appraisal. If you're in an HOA or a condo, you're going to get some documents to review, and you always have 3 days at least to walk on those documents. So if you wanted a hot pink door and the HOA won't let you have one, you can get out. if you have cold feet, and that does happen, people have more time to pick out a pair of jeans than they do to pick out their house lately. So you can walk on the HOA documents if there is that HOA. Do your home inspection, appraisal, and then your financing contingency, and then you do a walkthrough. If I have repairs negotiated, I have learned the hard way. I like to do 2 walkthroughs, one a week before closing and one the day of or day before, just in case those repairs were not done, and then you're not screaming at each other at settlement. You then have like a week to just hash it out with the seller. And then you go to closing and you sign a bunch of papers and you meet Cindy and she gives you a goodie bag and it's lovely. But prior to closing, about a couple days before, you're going to get your closing disclosure or a CD from Kelly or whoever your lender is. And that is going to tell you what you need to bring to closing. And then you're going to get an ALTA form, which is going to have the same information, but it's going to have the sellers on one side and the buyers on the other. Very easy to read. I love it. But before you go to closing, the deal is not done until everybody has signed and the funds have arrived. So you need to wire your funds, and Community Title Network does require wired funds. So my question for you, Cindy, is why do you require wiring of funds, and how do you ensure that the funds get wired safely? Because wire fraud is...
In Virginia, we have 48 hours to disperse, and we have to record the documents prior to disbursement. So we need immediately available funds. Everybody used to bring certified checks to closing. The banks actually are putting holds on those, and it depends on the bank. And the bank that it's being deposited in and the bank it's being drawn on, how long it takes for it to clear. And they're doing that because there is a lot of check fraud. So wiring is the only way that it is immediately available funds. And we are very careful. If you read my emails, anybody in the company's emails, and if you go to any other company, it's pretty much the same thing. Signature lines all say, we do not send a second set of email instructions. If you get them, call us. We send ours either through our settlement software, which goes out securely, or we send it through a secure email, which may include having to create a password, all of that. And it's all for safety purposes. And we only send it to the parties that need it. We're not trying to not include the agents. But if there's no reason that they don't need the wire instructions, we don't send it there. And again, everything goes secure. It's on the wire instructions. Call us. Call and verify while you're at the bank. So many of the technologies that the banks have, you can sit at your computer and do it. And we always suggest call us and verify before you wire anything. That way you are very confident the money is coming directly to where it is supposed to be coming to. Even when we wire out, we require 2-party authentication, whether it's me reading it back at closing because you've handed it, or somebody from the company calls and verifies. There's always safety put into place, and that's why we request call us, so that there's no type of chance. There's no chance that anybody has sent a second set, which has happened.
And then at closing, you also want to bring an extra check just in case that you didn't quite pay enough. And you should also bring your driver's license or other form of ID. Don't forget those things.
And some lenders, I just got loan instructions from a lender, and they want 2 sets of IDs. They want to see, there's a whole list, Social Security card, utility bills, anything that shows that that's really, who you are. And it goes from lender to lender. And we get a lot of calls ahead of time. We need to wire ahead of, early. We want to wire early, and we balance with the lenders. So what you get 3 days ahead of time may not be perfect, but it will be very close. I always suggest rounding up. That way, there's not going to be any chance that your wire could be short enough that we would, because we usually accept up to $1,000. But like Jesse said, bring your checkbook, and if you have wired too much, we will cut you a check back at closing.
So this has been great. If anyone who's watching this has watched this whole way through and has further questions, I've been doing a lot of Zoom buyer consultations with people, and in-person buyer consultations now that more and more people are getting vaccinated. Hooray! So, feel free to reach out. You can send a message on Facebook or look me up on Google. My name's right there in the corner.
Can I jump in real quick now that you brought up about vaccinations?
Sure.
A lot of people were very concerned with going for walkthroughs, going for home inspections, and especially going for closings. How can we do it virtually? It's very, not every lender will allow a remote online notarization. There's not a lot actually. Every settlement company has a standard for keeping everybody safe. Some companies, you make an appointment and they'll meet you at your car. They'll go over documents. Some are doing Zoom meetings like this ahead of time and then coming in. We, in my office here, we have an advantage of having 2 very large conference rooms that the building has available if anybody's uncomfortable with meeting in an enclosed space.
And on that note, I have appreciated how you, Cindy, have come to the closing at the house for us a lot of times, which is really awesome. I love that I can have a walkthrough and then I can bring champagne and Cindy's going to show up and then I can pour the champagne and we can all do closing there with champagne. Haven't done a lot of champagne lately, but that's my future goal. And so that's just something
Jessica takes a picture. Ta-da.
Yeah, we took a picture. You get a picture with a giant key. That's your only reason for buying a house, right?
That's right.
So, but yeah, I'm fortunate to have this wonderful team. Kelly and Cindy are wonderful, and I appreciate you taking the time to be here. And I have their contact information. I'm happy to share with anybody who's interested. If you're watching this and we didn't go over something that you wanted us to go over, because I don't see any comments, please comment with any questions or any topics that you'd like to see for future videos. And we will be happy to come back again and answer any of those questions. And if you ask a specific question, I will tag you on the video so that you'll know where it is.
And if there's anything additional, I do have a lot of information that can just be generally sent out.
Cool. So thank you so much. And we'll see you next time on our show, which we don't have a title for yet. I guess it's in real time with Jesse and Cindy and Kelly. Okay.
Thank you, Jesse.
We're going to become famous like, Kelly and Regis originally.
We're going to be famous.
That's right.
Just you wait. All right. Thank you. Bye,
Thank
everybody.
you. Have a great day, everyone.
You too. Bye.